Consult an advisor or conduct your own due diligence when making financial decisions. General principles discussed during this program do not constitute personal advice. This program is furnished by Dentist Advisors, a registered investment advisor.
Welcome to the Dentist Money Show, where we help dentists make smart financial decisions. I'm Ryan, and I'm here with a panel today, actually, which is a beautiful thing. We've got Taylor and Will and Jake and Robbie and Matt the Mountain. What's up, guys? What's up, everybody? Thanks for joining us. How you guys doing?
We got to point out the money chain for Will, the money chain for Jake. We kind of went half, as they say. Can we say this on air? Half-assed the.
Yeah, we half-assed.
We half-assed
we need to make our podcast explicit. That's like the next territory.
100% agree. 100% agree.
Let's do it.
Well, okay, so 10 years ago, which seems insane. It seems like a lifetime ago. We hit record for the first time. It was Reese Harper, little shout out. And myself.
Do you remember it, Ryan, for real? Do you remember that episode?
Episode 1 was in the basement of the old building. Me and Reese. Justin was in the corner. We called him Q in the studio. He had a clock on an iPad, and we had scripts to read, including jokes that were written out. So, and actually, the first one was me and Reese standing for audio purposes, and we thought it would flow better. We actually were standing face to face with microphones. Picture that. We had a microphone stand. I had a teleprompter. He had a microphone stand, teleprompter. We were facing each other. Justin's in the corner keeping time. And like, I'm looking at Reese. You
guys were like staring into each other's eyes, or?
I felt dumb so many times in my life, and that was definitely one of them. But the goal was to start the podcast and help dentists make smarter financial decisions and feel more confident about money. That was the whole point. We wanted a channel or a place to teach and give away as much as we could for those many, many dentists who would never become clients. There's a lot of dentists out there. So that's where it began. Since then, thank you, listeners. You've listened. You've learned, you've laughed with us and probably at us through hundreds of episodes. What episode number are we on, by the way?
Over 700, I think.
It's crazy. You guys have made the Dentist Money Show what it is today, and we are actually really, really thankful and grateful. This is some of the funnest stuff we get to do at Dentist Advisors. So to celebrate a decade of conversations and stories, we're going to raise our mugs to you guys, literally. So right now, push pause, go to dentistadvisors.com/10 years, and that's the number 10, dentistadvisors.com/10 years, and sign up to receive a free Dentist Money Show mug. I've seen it with my own eyes. It's beautiful. Go there. And while you're there, we'd love if you could share the most valuable thing you've learned from listening to the podcast. So if you've been a listener, share something that you've found valuable. It can even be making fun of one of us at some point in your life.
Or maybe it's not valuable, Ryan. Maybe it's something.
Or maybe it's a criticism.
A criticism.
It's a deep, deep criticism. So without further ado, having said that, we are going to revisit a list of things that is, kind of grown and been curated over time. Matt, why don't you give us a little intro to what we're going to be expecting today?
Yeah, we were trying to make this special, and we
do every episode.
We make everything special.
You know what I mean?
We try. And we've talked on and off about what to do with this episode. We've been talking about this for quite a long time. Again, just crazy that we're literally at 10 years of a little podcast for dentists talking about money. But we thought,
cool.
So this is kind of in conjunction with us, as we've alluded to over the last few episodes, kind of in conjunction with the project of going back and kind of resurrecting old episodes that we think that either we still agree with, or things that we wanted to change. And so this kind of all happened simultaneously. And I stumbled upon an episode that Ryan, you and I actually did this. It was about 5 years ago. But it was basically 10 principles for dentists, 10 money principles. And it got us all thinking, what if we did for the 10 things we still believe 10 years later?
Love it.
And so just kind of like these core money principles that, we have not changed our mind on. And we just thought we would do this panel and share these principles over the years that we've not wavered on and have not changed.
Yeah. I love that we've been doing this Yeah, thanks everyone for being here. Again, Taylor, Jake, Will, Robbie, and me and Matt and all of you. So thanks for being here. Let's jump in. We're going to go through these. Each one of us, or some of us here, are going to have a different piece of these, maybe one or two each. We're going to go through kind of what we believe, why it matters, and an example or a story. What I thought was cool about this, Matt, as we've been doing this is like most of these principles are still tried and true, but maybe the application of some of these things has changed over the years, and it's cool to see how that's changed and, kind of just acknowledge that. So you ready to dive in?
Let's dive. Let's jump head first.
All right. Okay, let's go. Let's go with your little party hat. No one has a party hat on anymore.
We all took the party hats off.
Fine.
It was kind of giving me a headache, so I was
Yeah,
like, I
it was
can't do
pretty
an
tight.
hour.
Yeah.
It was like pulling my chin hard.
Yeah, we're just holding him up. And like I said, I had this money chain like you guys do, but it broke literally as I was pulling it out of the package. And so
I'm never taking mine off. I'm sleeping in this
we
thing.
were saying we're going to keep him on for client meetings and just be like, you want this? You want to be dripped up like us? You better, you better
Be
follow
dripped
our
up.
advice.
The chains are so cheap. It's so cheap. It won't even turn your skin green in the shower.
Yeah, exactly. They won't break the second I open the package. So,
Yeah.
Okay, am I starting this with the first
Yeah,
principle?
let's jump it off. Kick it off for us, Matt.
First principle. And we actually, it's funny, we haven't talked about this. We created the doc. And so I want to know as we go through this, like if anyone on in this panel, this Brady Bunch panel, if you disagree with this, I guess now's the time to bring it up. Maybe we'll get spicy, but
We just
principle
turn this into like an argument.
into a debate. Yeah,
We're just
exactly.
gonna,
Whenever I get together with you guys, I just want to disagree with everything you say. It's just my natural tendency. So we'll see how this goes.
We've never noticed that. That does not. Okay. Principle number one, that we still believe 10 years later, your expectations are more important than your income. I actually am super glad we started with this one because I think there's a lot of things that kind of flow from this kind of foundational principle and something that we talk about a lot. I think so. The first thing I thought of going through this or thinking about this principle was just how dentists are often, so first of all, kind of one of their gifts is that they're very focused on like the next thing. They're usually type A. They're focused on progress. They're focused on like they're obviously the smartest people. Some of the smartest people. Yeah, benchmark exactly. So they're some of the smartest people in society. But I think where sometimes that gift can become a curse is when it comes to money. And something that, one of the biggest kind of things that we talk about with clients is, and one of the biggest risks when it comes to money is getting the goalposts to not continue to move. And so we very much believe this, that it's everything that you do when it comes to money should be kind of grounded in your why and your purpose. And that takes a lot of work, and that the goal itself can't just be, dollars on a screen. That becomes basically an unwinnable game. So this is something I still firmly believe, that your expectations are more important than income, but I'd love to get the panel's thoughts on this principle here.
Yeah, I was just going to ask when everyone jumps in, how many times in your career as an advisor have you seen a client have a goal? And we've all done this too. You have a goal of a certain collections number, or like when I finally earn $500,000 or whatever, they're actually not they might even be more stressed out by the time they hit that collections or income number. How many times have you seen that actually happen?
Yeah, I mean, I have a quick story that just came up a week or two ago. I had a client that had a collections goal, and just to give you some background, they are on track to collect $4.5 million at their practice this year. And this is after when I first started working with them, they were in a really rough spot financially. But when I jumped on the call with them, I was expecting him to be excited, but he was just stressed out of his mind. And he was like, I don't know what's going on. Like, I kind of wish I could go back and just be a barber, because before he was a dentist, he was a barber. And I was like, why do you say that? And he said, when I was a barber, like life was more simple and I, made enough for what I needed. But now that I'm doing so well, keeping up with the Joneses and our spending has gotten out of control. And now it is just this hamster wheel that I'm on to try and keep up with this lifestyle, because I have just increased my expectations of what I need and what I can do with this extra added income, which was fascinating to me because, we were in this place a couple of years ago where they were just really struggling because they weren't doing well at the practice. And now by every conceivable metric, the practice is very successful, kicking off. I mean, they had 100,000 in profits alone last month, and he's just stressed out of his mind.
Yeah, can I put some numbers to this? This
Yeah,
is
Jake.
Jake, by the way, for the
Jake.
people listening who don't know who's talking. Maybe all these voices coming at him. This is Jake talking here.
Yeah.
That was Taylor who just spoke. Just from a numbers point of view, like Taylor was saying, we often equate our expectations with just spending and lifestyle. And if you listen to this podcast for a while, our rough calculation for how much you need to retire is about 25 to 30 times your annual spending. It's kind of like our benchmark that we use. Just back in the napkin math, you can do it at home. That's kind of your financial independence number. So let's just say you're living your life, and from like over a couple of years, you inflated your lifestyle by about $25,000 of spending, for annually. So you just increase spending by about $25,000, which isn't unreasonable. I think that happens for people with kids and moving to new houses. That's pretty normal. And let's say over that same time, you're like, man, I've been saving, I've been investing, I grew my net worth by like a couple $100,000. Things are feeling good. Well, you may actually not be any closer to your goal if your spending is increasing at that same pace, right? So for example, let's say you did increase spending by 25 grand over the course of a year. What that equates to 30 times that amount for like retirement assets that you would need is about $750,000, right? So in order to keep up with that spending, you'd have had to have grown your net worth by $755,000 just to keep up with that increase in spending. So even if you that's a lot of money. If you grew your net worth by 750 grand over a couple of years, that's awesome. But if your spending went up $25,000 annually, you actually aren't any closer to retirement.
Yeah, thanks,
Just wanted to
Jake.
bring that up.
It's good numbers, Taylor. That's a good example. Anyone else have anything to say about your expectations are more important than your income?
Just to back to what Taylor said, not a specific example here, but something that I know we've all kind of discussed before, where we actually talk to clients years and years later as the progress they've made, like Taylor's client that he mentioned, more stressed out about their tax bill that is now like 4 times what they used to make when they first started dentistry. And I've pointed that out to people, trying to give them kind of like, not like to patronize them, but just to give them like a reference point. Because I think this is a really normal human experience of like, we just adapt, right? But I just think giving people reference points of like, I think this is probably why tracking your progress is so critical. One of the underrated parts of this is to give yourself a sense of where you used to be to where you are now. I just think it's really, really important because again, we have so many dentists now that it's like, literally their tax bill's 4x what they used to make, and they're 10x more stressed about it.
Yeah. Not as satisfied as they used to be when they were barber. That's a really cool example.
Yeah, that's
actually.
crazy.
Let's go to number 2. Organization is the foundation of sound money decisions with our own Will Gochner. Will, take it away.
What's up? If anyone who's watching, I just got to pack some boxes after this. So.
Will's in the back. He's moonlighting at UPS.
We said he looks like, and the blue shirt actually looks like you work at like a UPS,
yeah, it's literally like a UPS store,
or
employee.
like what's the like an Office Max or something.
Yeah.
For reference, what this actually is, Will's not moonlighting at UPS. Yeah, we are getting ready to send out client gifts. There's hundreds and hundreds of boxes that have to be built and packed. So Will's going to get us started today after the podcast, I think, back there.
For sure. Solo, just grinding. Any clients out there, you can expect an amazing gift hand packaged by me. So
yeah,
if you're not a client, you might want to become one. So the second section is that organization is the foundation of sound money decisions. And I mean, that can't ring any more true than anything else on this list, I think, for us, because that is like one of our core philosophies, and it always will be. That will never change. Like if we do a 20-year episode, it'll be on the list of 20 for sure. Organization, you can't overstate it. We built this business on serving dentists, right? Like that was a decision we made many, many years ago. And one of the reasons, as everyone who's listening to this knows, is that the life of a dentist, the financial life of a dentist is frankly pretty complex. And it's more complex than the average like human person, American, whatever you want to say, because you come out of school, you have a lot of debt, you have to go into more debt to get a business, you're a business owner by trade, and you are a clinician, and you have lots of employees, and there's just so many hats to wear and things to juggle. We know that it can get out of hand quickly. We have a lot of new clients come on board where they say like the minute that they get organized, it feels like this breath of relief, and they can finally see everything in front of them, and they can start to make decisions based on that. we have a mantra that we've always kind of stuck with, and the 4 steps to like success in making decisions are organize, that's step 1, analyze, decide, and act. You can't do the next 3 steps. You can't analyze or decide or act until you're organized. So that's kind of my spiel on that. What do you guys think?
We used to have T-shirts. Those are
Yeah, I was going to say.
stuck in the back somewhere.
The worst T-shirt we ever made, I think. But it was the good letters. The design was terrible.
Yeah, design was terrible, but it's a good stat. Like I think it's a really good visual overall. Yeah.
Yeah, I think that will forever probably be the answer to 2 questions. Number 1, what's the biggest money mistake dentists make? Being unorganized. And number 2, what is financial planning for a dentist? Is being organized. Both fairly boring answers, but they really are like the foundation of all those things, for sure.
Well, and I have a unique perspective on this because, I guess first off, everyone on this call, we all grew up wanting to be dental specific financial advisors. Like I knew that's something that we all had on our bingo
It's
card.
either that or a veterinary. Yeah.
Yeah. Rock star. Whatever.
But I come from a place where my background is in like a financial services industry that's very product focused, right? And I feel like for the most part, the financial planning industry as a whole is very product focused. If you interviewed most advisors, they would think their job is to sell products, is to sell solutions. And the thing that drew me to Dentist Advisors in the first place as an advisor, as someone who wanted to work in this industry, was just our approach to financial advising, that we don't sell products, we sell organization, we sell a system, we sell actual education and applying financial principles to your life. And it's a really, really hard sell, right? It's not something that you can go to a booth and say, look at this awesome product, right? We really have to educate, teach, and inspire people to make changes in their life. And one of the biggest reasons why I was so excited for this podcast, just because we owe where we are today in no small part to this very podcast that we're on and all of the educating and principles and things we've talked about, starting with this principle of organization being at the foundation of financial planning.
It's a great
Thanks,
point.
Taylor.
We just like making things harder. We should just start selling products. We've been saying
Just
this for
hawk
years.
some insurance and some annuity.
Yeah.
Some
Some newts.
Some newts, write some premium in this.
Or maybe we just want to admit really quick, maybe after 10 years, we can just admit that we're just not good at selling products. Like maybe that's really what this is.
I couldn't.
We're just like, we actually suck as salesmen. So we chose the path of financial advisor.
I ended up talking people out of like, you don't need this. Just don't do this. Yeah.
Yeah.
Anyone else? Organization is the foundation of sound money decisions. Jake, Robbie, Matt, any comments here?
We nailed it.
Okay. There's that old phrase like, I only have an opinion because you asked me to have one.
Yeah.
I don't know where that came from, but I love that. Okay. Number 3, this is going back to Taylor. Your temperament is more important than your tactics. Taylor, what on earth do you mean by that?
Yeah, this one is really
I have
hard.
no idea. I didn't write it.
Actually, I didn't write that. I just got assigned to that one.
This is definitely written better than I would have said it, for sure. But
your bad attitudes making you poor. Is that what you're?
Yeah.
I find that Ryan and Matt live rent free in my head. Right? There's a lot of is dentist money isms that just are always in my head when I'm talking with clients and they come up. And this one really comes up all the time in conversations with clients, and that is that the great dentist that's an average investor will do way better than the great investor that's an average dentist, right? And what does that mean? That means that when it comes to investing, temperament is so important, right? Which is really, really hard to wrap your brain around, because our entire lives we've been told the harder you work, the more effort you put into something, the better you will do, right? And it feels like that's the case when it comes to investing. It feels like if we're making trades and we're moving money from here to here and we're putting in these advanced tax strategies and all of these, products and solutions, that we will do better because we are doing something. We're putting our time and our energy and our attention towards this investment, or our portfolios growing. And unfortunately, what we found over time, and this is not we as in Dentist Advisors, this is just we as investors as a whole, is that a lot of times we shoot ourselves in the foot the more times we put, or the more time and effort we put into our portfolios, right? The market does its job, right? we are the ones that get in our own way. And we need to be careful that when we are doing and we're building our portfolios and trying to gain and capture returns, that we are not listening to what's going on in the news. We're not being swayed by what our friend, neighbor, brother-in-law told us, right? And that we really keep a level head and have a very mild-mannered, calm approach to our investment portfolio.
Yeah.
Love it.
Can I
Thanks,
jump in
Taylor.
here?
Jake?
It's not about what you know, right? That's the whole personal finance deal is it's not about what you know. It's about how you behave. This is like the crazy thing is in today's day and age with the internet and ChatGPT and everything that we have more information at our fingertips than ever before in human history. But none of us are better savers or investors or better at managing our wealth or doing those things than we ever have been before. It's because it's not about the information. It's all about behavior. Personal finance is so cool, but maybe so frustrating in the sense that an uneducated farmer who doesn't, shout out farmers, I'm not dissing on farmers.
Shout out to
My
farmers, and
father-in-law
many
is a
of you are
farmer. I don't know
actually
why
very
that came to my
educated,
mind. Yes,
too. Yeah.
exactly.
It's a lot of
Father-in-law,
educated farmers,
yeah,
for sure.
Stan Fowers, if you're listening, shout out. But like an uneducated person who doesn't pay attention to anything, doesn't listen to any news, can outperform like a triple PhD Wall Street person over time and have
And
better
quite often,
finances than them. And so it's kind of counterintuitive, and it has nothing to do with information and everything to do with behavior and savings and managing your emotions and being smart or being consistent. It's cool and maybe frustrating in that way.
Thanks, Jake.
Jake, I thought you were going down the road of the Mark Twain quote, so I decided to finish that. You said, which goes, "It ain't what you don't know that gets you in trouble. It's what you know for sure that just ain't so." And I thought you were going to go that route because it's kind of encompasses this whole thing that people want to believe that what Taylor was saying earlier, the more activity, the more trading, that we can time this thing, we can beat the market. People want that to be true, and it just is not. And it's everything that you guys just said. And I want to come back to something because Robbie and I had a conversation with a dentist and her family, very, very large portfolio. And they are considering coming over to Dentist Advisors. And we've had multiple conversations. And one of them was, because again, they've got multiple seven figures in investment accounts, and they wanted to talk the investment strategy specifically. And one of the things that they brought up as a concern coming over to us is they've been convinced by this other group, I will not name names, but they've been convinced by this other group that they've got, as he put it, teams of people watching their portfolio every day and trading it every day. And he looked at this, and I'm not blaming this guy at all, but he looked at this as a strength. He was like, "Oh, are you guys going to do this too?" And Robbie had to hold himself back from laughing. And obviously Robbie did a fantastic job of educating on what this all is. But I wanted to bring this up because it's what I think Taylor said earlier, that our industry still is very much selling people on tactics over temperament or special product or strategy. We have a better mousetrap. And it is very difficult to fight against that and to tell people the truth when they're when they want to be lied to about some special strategy. Robbie, you know what I'm talking about.
Yep, 100%. And actually, this reminds me of a quote by either Warren Buffett or Charlie Munger, where they said, "This industry does not need really high IQ points. So if you had the chance to shave off a couple of IQ points and get better behavior and better temperament, you'd do much better investment-wise." So the fact that, hey, yeah, we've got multiple people who are kind of acting as too many cooks in the kitchen is actually showing you value. This is a whole different ballgame. It's a game of letting compounding work, and it doesn't mean that you have to poke it every once in a while. You have to let it do its work.
Sorry, really quick. We're not saying tactics don't matter. We're not saying strategy doesn't matter and that you still have to have those things in place. It's just that temperament and behavior, everything you guys just highlighted, is far, far more important.
Yeah, Matt, I can't believe you didn't say, compare this to the diet, health, exercise industry and fitness.
I know. I was trying to
There's never
change
been
it up
more
a little
information.
Coming. No,
Yeah.
that's coming.
later. I've got ideas for that later.
It was
It's
in my
coming.
head. I held back. Robbie, let's keep it going with you. Number 4, kind of really similar topic. There are no shortcuts. What do you mean by that, Robbie?
100%. And I think this ties into all the, lessons we've discussed about it. It's not enough to set your expectations once, or to get organized once, or to, weather a storm by having a good temperament once. You have to keep on doing it. And this is what we forget. We think that it's a set it and forget it type of thing. But you need to stick the course. There are no shortcuts, because, as I just said, it's a different ball game, and compounding requires us to stick the course as long as we can. You guys know I'm going to bring numbers into this. You invited me, so here we go. So at what age, I'm going to quiz you, do not cheat. At what age did Warren Buffett become a billionaire with a B?
65.
Yeah, I'm going to say 60s, 63. So just edging.
He became a billionaire at 56, according to this research that I did. What was his net worth at 65?
Dozens and dozens of billions. 25 billion.
12 billion. And that was at age 65. He's now 90 something. What is his net worth right now? Over 140 billion.
Yeah.
Right? So just look at the difference between 12 billion to 140 billion, and then look at the difference between net worth 0 to net worth 12 billion, and see how long it took just to get the 12, and then how quick it took until you get to the 140. And this is what we really mean by there are no shortcuts. You have to sit there and let compounding work for you. I actually have more numbers for you. And this is very simple, back of the envelope calculations. If you have 100K right now and it's compounding at 8%, how long will it take until it becomes $1 million?
Compounding at what?
8%.
What is that, like 9 years?
30 years, because it's just that 100K, you're not doing anything for it, and it's going to multiply 10x, right? But at what year do you think? So it'll take 30 years from 100K to become $1 million, invested at 8%. How many years will it take until that 100K becomes 500, halfway through?
20 years.
Yep.
25 years.
That is right. It'll take exactly 21 years to get there. And you look at it, okay, so it takes 2/3 of the way to get half the amount, right? Like, there is a mismatch here between the money. So how much is the amount when you go halfway through time? So in 15 years, how much is that 100K? That 100K is only 300K. So on the road to $1 million, if you start with 100K, you've already crossed half the distance by only moving your money from 100K to 300K. And this is why it means there are no shortcuts. You have to go through this compounding path where it feels really bad at the beginning, but later on you're in a much better position. And to link this to dentists, how absurd would it be if I go to your clinic and tell you, hey, I really do not want to brush my teeth every single day, but please guarantee that my teeth they're not going to fall off in 20 years from now. You look at me and it's like, just go and brush your teeth every day. And the same thing happens with investing. There are no shortcuts. You have to stay invested, and that's how you guarantee good returns.
Thanks for that example. I mean, all of us can think of clients that we've had, especially over many years, where you watch them go from nothing or very little in terms of net worth or investments and savings, and just given time and nothing extraordinary, very average performance, average savings rates, average practices and income. These people amass multiple six figures and into seven figures. And it's really cool to see that anyone can actually make that's what's so cool about that too, is that secret of just taking time and no shortcuts is accessible to everybody. It's not an investment only, available to the very rich or the people who like really know, from a seminar or something. Or TikTok.
Do you guys know if there are any like health or fitness analogies that we could tie into this?
Oh, that's
any new analogies from fitness that are fresh from in the mind?
I was just going to say, so I've been talking about this a lot on year-end calls with clients where, to Robbie's point about compound interest and everything, I think obviously your investment account, that makes sense that you're playing the long game. But I think just the career path of a dentist in general is the exponential curve. It's the hockey stick, right? Where it's flat for the first 10, 15 years. That's just kind of the way it goes. It's harder to get the ball rolling. It's harder to get the debts paid off and get the income to grow. It's a slower slope the first half of your career. And then you hit the hockey stick. And really the second half of your career, you start jumping and you start seeing, oh, my practice debt's paid off. There's $8,000 a month that's now I'm just have now. And now I can put it into my investments. And you start seeing the snowball get going quicker and quicker down the hill and accumulate more snow. And it's the long game. You can't eat one healthy meal. You can't work out once. You got to be doing this forever, right? And that's the reality of it. And I love the teeth brushing too. Like you got to just do it the rest of your life. And if you do, you're going to be in great shape. You are.
I love that Will's forcing the analogies on fitness.
I'm the most in shape one here. So
yeah, Taylor, what were you going to say?
This is why most of the financial advising industry is still very product focused, because we as consumers want the magic diet pill. We want the quick solution. We want the shortcut. And so it's really, really easy to pitch somebody a product that is a shortcut that's going to get them to wealth quickly, just to get them to sign the dotted line and give them some of your money, right? And it's really, really hard to preach, hey, if you increase your savings rate and pay attention to your spending and organize your data and pay attention to your collections for 25, 30 years, then you'll be in
20 years. Yeah, it doesn't seem very fun. So you better find ways to enjoy your life along the way, because it'll happen if you let it, if you don't get in its way. Yeah,
well, this is when Robbie was going through that, like couldn't help but think, like, this is what makes investing hard, is what Robbie just said. Like, you can be 10 years into something and still be like, where are the results? Like, I feel like I should be farther ahead than I am, because it is, and we're acknowledging that it is really, really hard. It is really hard, to Will's point, when it comes to health and fitness. It's really hard to take the truth, which is you got to grind every day and put in, like you said, Will, you can't have one healthy meal and be like, where's my six pack? It takes a long, long time. And it is really difficult. The other thing I was thinking of during this is going back to the first one about expectations not matching income. We're all out here just copying people's results and not thinking about the work it took to get those results. And it's never been easier to see people's results, whether they're real or not. A lot of them are fake. And people pitching kind of their results after 30 years of success or 30 years of grinding, and they're trying to sell you a course. Like, you guys, you ever see on X or Twitter or whatever, like, something that took me 20 years that I'll teach you in 3 days, like
in a thread,
5 minutes, like in a thread. That is like the quintessential, like in a microcosm of what's wrong right now with social media and all this stuff. And to Taylor's point, what's wrong in our industry is people trying to copy results as opposed to copying the process, and realizing, like, to get to that result of wealth or the good looking body or whatever, it's going to be a grind and it's going to be a process. Mm-hmm. And truly, there are no shortcuts. There's no overnight success.
If they're selling you, if they really are rich, why are they selling you a course?
Exactly. Grant Cardone, I'm looking at you.
Let's move right into number 5. Actually, I think this Jake's piece for number 5 here kind of speaks to that question. Like, why do we then, if we know this is true, it's a principle that works in like every part of everywhere in life, why do we get in our own way? What happens in year 7? Why can't we get to year 15 or year 20? Jake, balance over burnout. And burnout being a huge topic for dentists. What you got?
I mean, we can even hit on this one pretty quickly, because I think it's a lot of the conversation we've already had, which is kind of, yes, we've been talking about the investment portion, but if we just want to move to more of like the career lifestyle portion of this a little bit as well, I think I've said this a lot, too often we treat personal finance like corporate finance, which is like the main objective of pretty much any business is to make a profit. Just like, how can we make as much money as possible? Right? Kind of what's just the bottom line there. Personal finance is not like that. Personal finance's end goal really is to seek to maximize happiness or life satisfaction or contentment, whatever word you want to use there. It's really not to make the most money. Like, that is like, how can I make as much money as possible is not a financial plan, unfortunately. First of all, there's always going to be more money to make. So that's like not an achievable goal. There will always be someone richer than you. There will always be another dollar to be made. Second, again, there's no really reward for being the richest person in the graveyard at the end of your life, right? There's no one patting you on the back for that. In the end, all we have is our life that we want to live. And so our goal, or the goal of personal finance and planning, is really to try and figure out how to make the money you're making work for you to live the best life possible for you, right? We call it your rich life, right? We talk about a lot. I know Ramit Sethi talked about that too. Just like, how can we use your money to help maximize the happiness or things and purpose that you want in your life. And this is not just making the most money as possible. So for dentists, I know all of us have experiences with, okay, I graduated dental school. I opened up my own practice. Things are going well. I'm a few years in. What's the next step? Maybe it's everyone just tells me I need to do a new location and expand to that. Then after I open up that location, maybe I'm going to do the next location and the next location. I'm just going to keep expanding and keep growing. For some people, that's maybe an awesome goal. Like they just want to serve and help a lot of people. But you really need to ask yourself, is that the right thing that you want to be doing? Because that is going to be adding on stress and work and risk to your plate. And it's like, is that really those career and financial goals? Is that in line with what you really want out of life? Are you really working towards your ideal lifestyle or your ideal week? Anyway, those are my initial thoughts on that. I don't know if you guys want to piggyback on that at all.
Yeah, whether you're a barber or a dentist, I mean, you can
Any profession.
derive the same amount of fulfillment and satisfaction independent of the money. It just depends what it means to you and how you use it. Totally agree. And burnout was a big topic of this year's Dentist Money Summit. Is it still this year?
This past year. Yeah.
It really does. Boredom and burnout seem to be one of the biggest obstacles that successful dentists trip over in the middle of their careers. And there's, it's perfectly logical why they get there, but it's a very, very common and relatable thing. Anyone else? Balance over burnout. Any comments?
The only thing I'd add here is just you get to define for yourself what balance means. And I think this is a real, this often gets thrown around. This is kind of like in now, this whole like work-life balance and all. Like, I'm not opposed to it. I'm really not. I think there's a step that goes beyond that, which is you define what that means for yourself. You define what burnout means for yourself. And that's a really critical piece of this is I don't like you define like, is balance to you mean a daily balance? Like I'm only working so many hours a day, or is it balance? Like I'm going to grind for the next 10 years because I want to eventually, I'm going to retire sooner than out. What you get to define that for yourself. We have a view on like what we think generally makes dentists the most fulfilled and happy. And it tends to be a balance over your career and not sprinting to some number. But I guess I just want to emphasize that we're not here to define that for you.
Oh yeah.
You have to define that.
If you want to work 60 hours a week in the practice, that's awesome. If that's what you love doing and helping people, that's fantastic.
Yep.
But it is identifying that, right? Being intentional.
Yes.
We talk about all the time. It's just, what do you actually want? Which is hard. I know like everyone says that. And oftentimes we don't even know what we want really.
It changes.
And it changes over time. And we need to test out different things. Like, do I like working a lot in the practice? Do I like doing 2 days a week? Do I like having an associate or doing everything on my own? We can test some of these things to see what makes sense. But Matt, to your earlier point you said in the podcast, oftentimes we just mimic what other people want or what people tell us what we should want. And I think an important part of planning is let's try and figure that out for ourselves. What actually makes us happy? What actually makes us happy in the practice or with our family or financially? And try and lean into those things.
Yeah, it's actually, I think it's Jared Hill from, shout out to friend, client, Jared Hill from Elevation Association, who in a lot of their trainings and teachings at Elevation, they talk about harmony instead of balance. Just that change of words.
Love that.
Because there are days, weeks, months, and even years where things are out of balance because they have to be. You have to work more. You have to spend more, like whatever it might be. But you can still find harmony even in imbalance. And that is it's a constant flow of things as life changes.
I'm glad you brought that up, Ryan, because I think I love that because I think sometimes the dark side of this whole balance thing sometimes can lead to unnecessary guilt for a dentist or anybody out there of like, oh, I'm not balanced enough. It's like, but I know exactly what you're talking about. When I think it was Dan who brought that up at that last Elevation event that talked about the word harmony. And I love that distinction. I think it's a really good point.
Yeah. I interviewed once, old friend of the show, very well-known dentist out of Arizona, Brian Harris, cosmetic dentist. And he was talking about some coaching he was doing with a mentor and a coach. And he worked a lot and he loved working because he's creative and he builds and he's built a really big empire in his own world, and he's influenced a ton of dentists and the industry really. And he got to this point where to your point, Matt, he's feeling a lot of guilt at the amount of time he spent working versus being home sometimes or being with the family sometimes. And he told this story how his coach would ask him, what's the most important thing to you? And he would repeat the answer he thought he was supposed to say, which is like, oh, my family time, spending time with my family. And the coach was like, you're lying. No, it's not, because you don't. And in that moment, he realized that, of course, his family's like, top of his priorities, but also working was something he highly valued. It was very fulfilling to him. Creating and building and work was like central to who he was as a human. And he said once he just accepted that that's part of what made him at that point in his life, he was actually happier in the time that he did spend with his family, and he was more present, and he was more grateful, and he let go of the guilt of it. So, part of it is just finding like what does bring you that flow and that harmony. And it doesn't have to be, I like what you guys keep saying, it doesn't have to be someone else's answer. I love that.
Such a great example.
It's so deep. All of these topics we could talk about for a full episode.
Okay. Let's go to number 6, throwing it back to you, Matt. Most things you worry about don't matter. I worry about the waves conditions, the swells and the tides and the wind a lot.
That matters, though.
And I would argue
Those do
strongly
matter.
that,
Yeah, I think this one's risky, I think, in the sense of I don't want it to come off. I really don't. I want to just call it out first. Like, I don't want it to come off like preachy. Like, what you're worrying about doesn't matter. But I think so if there's a better way to phrase this, please throw it out. But I do think it's worth highlighting that the day, and I guess I'm calling myself out, like thinking back and reflecting on things in your life, use the day-to-day stresses. I'm just going to make up a number here because this is what we do. I think like 90% of the things we stress about day to day end up not mattering as you stretch out the time frame. And unfortunately, it tends to take, as I think we all know, whether it be like a parent getting sick or someone you love dying, or on the positive side, shout out Megan on our team. She just had a baby. And I think it takes these moments in life to highlight what actually does matter. It's like those big moments, whether they be sad or really, really happy. And I just think I wanted to bring this one up because I think when it comes to our work and the things we talk about with clients all the time, it's really easy to get lost in the minutia of the spreadsheet, the minutia of the returns this year, or what the S&P, whatever. When really what this comes down to is we've talked at the summits, the Dentist Money Summits the last couple of years. We all know, right? We all know it's cliche at this point, but I think things are cliche for a reason because they're so true, that the only things that really matter that our focus should be in and everything in service to is our health, relationships, and our purpose in life. And, we talked about at the summit, I don't know if it was this year or the year before, but the Harvard study, I think it's very, very famous at this point. The biggest study, cross-generational study that seeks to find out what was literally the most important thing in people's lives that led to happiness, the strongest corollary to happiness. And it was unequivocal that it was the relationships in our life. And so, again, at the risk of sounding preachy with this one, I just think it's worth kind of bringing back people to this idea that, again, day-to-day stuff, for the most part, ends up not mattering in the end.
Yeah, this reminds me of a book and a list that we've talked about on a few episodes and throughout our content over the years, is the book, The Top 5 Regrets of the Dying by Bronnie Ware, where she spent years in hospice care with people at the end of their lives in their homes and interviewing them and writing their stories down, categorized everything into the top 5 regrets of all these people that she met who were passing away at the end of their lives. And it does recenter. I could read them if you want.
What are they? Yeah, well, they're just, essentially it's like work less, spend more time in relationships.
These are the time, and they're phrased in the voice of the people. So number 1 is, I wish I had the courage to live a life true to myself, not the life others expected of me, which you guys have been saying. We take on everyone else's dreams and be like, yeah, I should, live that same way. Number 2 is, I wish I hadn't worked so hard. That was those stories hit really hard. Number 3 is, I wish I had the courage to express my feelings. 4 is, I wish I had stayed in touch with my friends. Thanks, guys, for being here. And number 5 is, I wish I had let myself be happier. So yeah, Matt, I think it's not most things you worry about don't matter. I think that's a true statement. Anyone else? Jake, Taylor,
I think it
Will,
goes to that
Robbie?
last one, right? Like, I
Jake?
wish I'd let myself be happier is probably like on the other end. It's like, I just wish I would have stopped worrying about some things that don't matter. One quick thing, I know I'm talking a lot here, just like on a more, even like a less grand scale, kind of like we've been talking about. If we just want to talk about like the investment side of things and like headlines there that people get worked up about, I'm telling you, the headlines that you're going to hear over the next like couple of weeks or even next year are just not going to matter. to your portfolio. They're just not going to matter.
Yeah,
to your
And you
longevity.
can just play that clip 10 years from now.
They are
Again.
just not. Like even big ones, like who is the president of the United States, or are we in a trade war, or any of those monster ones are not going to matter to your portfolio over the long.
And by the way, Jake, you can test this. Go back to 1 year ago from today and go look at the headlines and see if A, any of it came true, and B, what impact it actually had on anything. And the answer is you can't find anything. The headlines of a year ago, hell, a month ago, that actually mattered today.
Mm-hmm. Totally. Okay, let's keep it going. We're pretty good on time for being at number 7. Kicking it back to Will. Time is greater than money. Yeah, huge yes to that. Take us through that, Will.
I'm just going to give a shout out to one of the greatest books/movies of all time and read you guys a riddle. My daughter's like super into riddles right now. I hope you guys know what this is from.
Okay.
This thing all thing devours, birds, beasts, trees, flowers, gnaws iron, bites steel, grinds hard stones to meal, slays kings, ruins towns, and beats high mountains down. Who said it?
Bilbo
Taylor
Baggins.
Not well.
Bilbo.
Gollum says it.
Oh, dang it.
Gollum gives him the riddle in order for him to get the ring, and Bilbo's asking. He accidentally answers it, asking for more time to solve the riddle, and he says time. He says, "I need time," and Gollum's like, "Freak, you answered the riddle." And iconic, great. You got to go back and watch the movie, read the book.
Can you say that again now? Now that I know the answer.
Yeah. So
Say
that's
the
this thing. This thing all things devours, birds, beasts, trees, flowers, gnaws iron, bites steel, grinds hard stones to meal, slays kings, ruins towns, and beats high mountains down. Time's coming for you. Father Time is undefeated, 100%. You're gonna get old. Your bones are gonna get, weary. You're gonna get tired. You're gonna get old. So like the point of this, I think this is hopefully semi-obvious, is time is your most scarce resource and by far your most valuable resource. All of the things we've talked about up until this point ring true with this, but find your purpose, find what matters. Use your wealth to buy back time, not just accumulate more of it. Take the day off, go on the trip. That's all you got. So what do you guys think?
I think
love it.
Oh, sorry, real fast. I think most people hit a certain part in life where they start to really relate to this a lot more. And we see this in dentistry specifically with money and financial planning and career decisions. It's when people start thinking of like, maybe I should get an associate or a partner or a bigger team or more help. Maybe I should outsource more stuff. I need more time.
Yeah. Well, this one's hit home for me recently, just thinking, again, I'm crazy. I have 3 little kids right now, 4th one on the way. Can't keep up with Will. No one can, but we're trying. And someone like started talking about holidays in terms of just numbers, right? Like with my child, I only have 18 Christmases. I only have 18 of these. And of those 18 Christmases, they might only remember 12 tops. Right. And when you put it,
They'll want to be with you on 5.
Yeah. And when you put it in context of that, it's like you really have just like some key moments in life that like they're only going to happen once. You're only going to have a handful of them and you need to be there for them. Right. And when they're there, you need to have the flexibility, the balance, the harmony in your life that you can be present for those moments because you're only going to get a handful and then you're never going to get them back.
So true.
We're getting freaking existential on here.
Yeah.
Well, I think this is connected to the one previous, right? Most things don't matter. This is the thing that does, right? And what you just said, Taylor, and everything you just said, Will and Ryan, that our time, our attention, where we're putting our energy, we got to be really thoughtful about that.
And your time's not guaranteed either. That's kind of the point, is like something could happen and you don't have your golden years, right? You don't have you work all these years to get to this arbitrary retirement age where you're going to go travel the world and do all these things. And I mean, I don't know if it's more often than not, but I think frankly, fairly often, a lot of people don't get to ever live out their golden years for one reason or not. So why are we wasting all the time getting there when we can enjoy it along the way?
Taking a big risk there. We talk about risk a lot in our business. That's a big risk, honestly, that people don't think about, is banking on the future being there, banking on the golden years, to your point, Will. And this doesn't mean frivolously spend.
Still
and don't
save your money, please.
Yeah,
Still
yeah,
please
yeah,
save.
yeah.
Your old
That's-
self is going to want a little bit of money. Yeah.
Yeah, no,
Wow.
for sure. And again, we're obviously financial advisors, so table stakes. We're saying we need to be thinking about the future, but not at the expense of these moments along the way and losing sight of the things that matter. So, like you said, Jake,
and
we're
even
getting existential, but I think it's important.
even if you have those golden years, do you have the relationships that make those golden years golden? Right? Did you maintain them? Did you, shout out Jake. He says, sometimes to be a good friend, you have to be a terrible spouse. So, there's that balance.
I believe that.
I want that to be a whole episode by itself. Number 8.
You could reverse that though, Jake, right? To,
Yes.
to be a good spouse, you have to be a terrible friend.
Yeah,
Yeah.
trade-offs with everything, right? We can't
Yeah.
have it all. Yeah.
I kind of love that.
That's
It's
a
usually
pretty
when
good.
Jake wants me to go golfing with him, he says I have to
It's
do that.
exactly
Yeah.
in that scenario. It's like, you know what? I tell my wife, Taylor needs me. I need to be a good friend today. I got to go golf with him.
You're a good,
So good.
You're a good man, Jake. Way to make a sacrifice. Number 8, Taylor, keep it here. This subject is dentists carry a lot of stress for a lot of reasons in a lot of different ways. This might be one of the number one tests or benchmarks of dentist stress. What is it, Taylor?
Number 8, things that we still believe after 10 years. And this is kind of a hot take, but it's liquidity, not debt, is the true stress test, right?
Totally agree. Yep.
And I think this is a really common thing. A lot of dentists, the average dentist right now graduates with $350,000 of student debt. So the new recent caps at $200,000 for professional student debt, I don't know what's going to happen there. So that's a headline and a worry for another day. But long story short, a lot of dentists, their first marriage is to debt, right? Before anything else. And debt is going to be a big proponent in their life. And so it's something that's constantly on their mind. It is very stressful, but you're probably going to graduate dental school with $350,000 in debt. If you want to buy a practice, you're going to add another $1 million in debt. If you want to buy the practice real estate, you're going to add another $1 million in debt. If you're going to buy a home in today's real estate market, add another $1 million in debt. I mean, it's not uncommon for a dentist to be just an average dentist, right? Not like a really big, crazy dentist that's got multiple locations, like just an average dentist to have $3 to $5 million in debt. And that can be really scary and really stressful. But what I found working with hundreds of dentists over the years is more often than not, the biggest thing that really caused dentists stress is not their debt load, it is their liquidity, right? If I have a client that's really stressed out, I can almost pull up their dashboard and see that their cash is going to be low without fail, right? If cash and liquidity levels are low, people are stressed, right? It's not typically the debt load that brings that stress as much as not having enough cash on hand. And they can definitely be tied, right? If you have a lot of debt and you have a high bar and there's things that preventing you just from a cash flow perspective to build up that cash. But specifically what I found is a lot of times people are very, very aggressive with their debt reduction strategies and they want to pay off their debts as quickly as possible. But when you find people in those situations, a lot of times they'll get to the end of the road and they'll be debt free, but they'll have low liquidity and they're still stressed, right? Because liquidity is flexibility. Liquidity is freedom, right? If I have $500,000 in debt, but $300,000 of liquidity, I'm usually not that stressed. But if I have $0 in debt, right? Or if I have, let's say, I have $200,000 in debt and zero liquidity. My net worth's the same in both situations, right? I am more stressed with $200,000 in debt and no liquidity than I am $500,000 in debt, $300,000 in liquidity, right? And just to give a quick story on this, I think it was Jake that brought this up, but he was talking to a client or prospect years ago that she'd come out of school, really aggressive with her debt reduction, wanted to get her student loans paid off quickly. And then her hometown practice became available sooner than she thought it was going to be, right? She thought she had several years, but it actually became available and the dentist wanted to sell and be done. And they approached her and were like, hey, do you want to buy this practice? And unfortunately, she couldn't because she'd been so aggressive with her debt reduction. She didn't have enough cash on hand. The banks wouldn't give her a loan. And that's just like a really, really sad story that highlights you need to have liquidity to give yourself mobility, freedom, flexibility to make moves in your career.
Yeah. Thanks, Taylor. Anyone else? Jake, Will, Robbie, Matt. I mean, this is a topic we talk about all the time. It's literally like how stressed is a dentist? Look at their liquidity.
I mean, this is like what makes you feel better, like having a debt paid off or knowing that you could pay off this debt if you wanted to.
Or
You have enough liquid assets and things like that. Probably feels
Options.
just as good.
Flexibility. Yeah, totally agree. We get this question a lot too when people ask about the way we do planning or build investment portfolios. And we build a dentist financial plan and investments around a lot centered around building liquidity. There's a lot of places you can put money, a lot of buckets, a lot of tax, consequences or advantages, different asset classes. But it really doesn't matter if you're a dentist who's trying to build a lot of locations, you're a dentist who wants a lot of real estate, or you're a dentist who just wants a lot of liquidity as part of your net worth. It's going to be really central and key, and it's going to keep your stress. It'll indicate where your stress is at, higher level.
I don't think I've ever had a dentist, truly, if you're out there, let us know. But honestly, I don't think I've ever had a dentist who's lived this, who's taken this advice and gone this route of building up liquidity and not being aggressive with debt. I think we are batting 1,000 when it comes to this. Of dentists coming back to us and saying, holy cow, you were totally right. Liquidity, the lack of liquidity is really what is making me stressed. And not having liquidity, into Taylor's point, cash flow will make will make the debt feel that much more stressful. It'll like magnify it, but it's not the debt. It's the liquidity. So I've never had anyone tell me otherwise.
Yeah. For a little story time, I've had recent conversations with 3 different clients who are near the end part of a career. They've accumulated a lot of net worth. These 3 people, particularly, totally different parts of the country and different lifestyles and careers, but they were personality. They were highly interested in a lot of asset classes. They wanted to spread their money to a lot of different things, a lot of private investments, a lot of real estate. Nothing wrong with those asset classes inherently, just generally speaking. But it's been really interesting to watch recently all 3 of them come back and say, like, kind of tired of this. Actually, I just want all of this sold. I want all this money sitting after tax in a brokerage account. I don't want to think about this anymore. It's been interesting to watch people who literally have spent years building a balance sheet that grew to dozens of line items of different kinds of illiquid investments, and then come back and go, I'm too tired for this. I'm too stressed. I want it just sitting there. I want options and flexibility and access. I want access to my stuff like immediately, and I don't want to think about it anymore. It's a really fascinating thing to watch happen over the career and life of a dentist. Let's go something kind of similar. There's a question we get all the time when people call us or schedule on our calendar to meet with us and see if we'd be a good fit for them. They'd be a good fit for us to be a client of Dentist Advisors. People ask, what is planning? What does financial planning mean? That term itself always comes across like it's a one-time event that you do, you print out and you're done, which is not the case. It gets sold like that. To Taylor's point, it's advantageous to our industry to package it like that, to sell a product one time. But going to Jake now, planning is a process. Take us through this for a minute, Jake.
Yep, this is something we believed 10 years ago. We believe it, I think, still today. We will continue to believe it 10 years from now. Here's the deal. Planning and strategizing is very important, and it is never going to end. That is the thing. We've talked a lot today, I think, about life is short and we got to enjoy the time too. Life can also be long, I think, on the opposite end of the spectrum. Sometimes if you're lucky enough, life can be long.
My grandma would say that right now, 89 years old.
If you're lucky enough.
This has been a long ride. Yeah.
Just think about everything that has changed in the world over the past, just go to the year 2000. I guess I was going to say 30 years, but let's go back to the year 2000 and just try and think about everything that's changed, not only in the world, but in our lives. Like, I'm just thinking about myself 25 years ago. I think the only thing I really cared about at that point was
born, Jake?
wheels.
Were you born back then?
At that point, just like life can be long, and over not even just the course of a career that we expect to be 20 to 30 years, but once you retire or maybe sell the practice or reach financial independence, there could be multiple decades of planning on top of that. Like, that is not the end point, right? There's a lot of planning from there. And so this is just something where life can be really long, and there's going to be a lot of ups and downs and things that we cannot predict, not even just in the world, but in our own lives. We've talked about we're really not great as humans about predicting what's going to make us happy or what we want, and that's going to change multiple times over our lives. And so whenever you create a financial plan, it's going to be out of date just over like a couple of months, and not likely, or especially over a year. And so what we like to do is not just do a one-time plan and set it and forget it. But what we really would encourage is let's set a plan, let's make some assumptions and get on the right track right now. And then let's revisit that multiple times a year, at least yearly, but ideally multiple times a year. And let's just keep tweaking that plan as we get new information. And usually if you do that, you're going to end up in an awesome spot down the road. And it's kind of like, I think there's some it's kind of freeing to admit, I don't know what's going to happen really in 15 to 20 years, but I do know how I feel right now. And I can have a pretty good guess of what's going to happen over the next year. And so let's plan for this year. And then let's plan the year after that. And then the year after that. And before you know it, you're probably going to be in an awesome spot down the road.
Yeah, Will talked about this earlier when he mentioned the ugliest shirt we've ever made in the history of Dentist Advisors, which I think I have the coolest one. The Dentist Money Show original t-shirts that are just like the softest, coolest ones.
The shirt was fine. We just chose to put the
design
print on like the back shoulder for some reason.
So bad. But the 4 pieces to what a financial plan is: organize, analyze, decide, and act. Although that is something that happens in the beginning of like an onboarding process when people work with us. There's a lot that goes into that, and it takes, months to get going and started. But really, that's a process that gets repeated every year and sometimes multiple times a year. We update data again. We analyze the data again. You're making new decisions based on new things that have come up in life, and you're taking new actions and having new accountability. So yeah, it's a process that never ends. And over the course of many years of a dentist career, they have so many decisions that they have to make that they often just don't think that they're going to have to make. A lot of times they're small ones, but they're dozens every year. And then sometimes there's a handful of big ones, but it's constant. It never ends. And kind of back to the last one you were talking about, Jake, with liquidity, or whoever that was. Is that the last one? Yeah.
Yeah, Taylor.
The amount of times a dentist needs money in their career for emergencies or opportunities is crazy. It's so frequent, and often unpredictable. Like to your point, Jake, seeing past 12 months from now is a really hard thing to do. So yeah. Anyone else? Planning is a process. Anyone else have anything
I would just
to
say,
say?
by the way, I mean, this is why we set out to have our business engage with dentists across the whole career life cycle, because what dentists don't often think about is planning gets even more complicated after your career. And I think a lot of times people want to believe that it's like, oh, I've reached the top of the mountain. We're good. I don't need this anymore. It's like, no, actually
I just take a little money
mountain. The game has completely changed. Rules are different.
And the stakes are higher because you don't have income anymore.
Emotions are way different.
Just thinking about this, what if you would have like explained crypto to somebody in like 2005? Like, isn't that funny to think about? And just like, what's the next thing? And it's just, we'll hit it as we go along here.
Yeah, or like a Labubu. Who knew what a Labubu was 10 years ago? You know what I mean?
Hot topic
I just
on
learned.
the team
Yeah,
these days.
yeah.
Let's round this thing out as it should be with
the closer.
With the closer. The keynote speaker. Thanks for listening to all of the warm-up acts. We're going to kick it to Robbie. The topic is there's no magic asset class.
Do you guys think there is one?
That's a hot take.
I had crypto. I just said.
I think liquidity is
I have
the magic
beliefs
asset
of
class.
I have beliefs of what is a better asset class for most, but
my opinion is too. But
I want to hear you, Robbie.
No magic asset class.
Yeah, of course. Whole life.
NFTs.
Yeah.
The reality of things is that there is no magic asset class. Every asset class has its trade-offs. We think of real estate and we like that it's tangible, but the trade-off is that you've got lots of liquidity and lots of leverage. We think of private equity and we think about, the bragging rights that you invest in companies before they go public, but you've got very long lockup periods. They're usually scammy and they're opaque in their pricing, and you have to navigate that. You think of crypto, Jake, and you really love the narrative and you ride it, but the trade-off is
it's fake.
I'll just
real.
say it. You're investing in something that does not complete the economic cycle, right? And then you do public equities, and we like how consistent in their long-term returns are, but the trade-off for those is that you're going to get drawdowns and you have to have some emotional endurance while you're investing in them. And then we have bonds where we like how stable and defined the return is, but the trade-off is that you've got inflation risk and probably not enough growth. So if you look at it, there's really out there in the market, there's no magic asset class. But success comes when you match your needs, liquidity, your behavior, temperament, all the stuff that we've talked about to the profile of that asset class and stick throughout the course. And that's when success happens at the intersection of these two. So since you guys told me to close it, I'm going to be a little bit cheesy. There might not be a magic asset class, but we can get very close to one. Because if you're a dentist who's like alleviating pain, giving people confidence, employing others, providing for your family, encouraging the community, and you're extracting from the markets and the asset classes what suits you and not get swayed by it, then you, the dentist, you're the magic asset. You're the one who's really making a difference.
Dude, I was just going to say that. I was literally thinking, as this came up, like, is a dental practice the closest thing you get, maybe?
Yes.
Boom.
Magic
As
asset?
a dentist,
Robbie
yes.
just freaking
Your career.
nailed that, dude.
Yeah.
We said he was the closer. He closed that.
Yeah.
That was a 110 mile an hour fastball to my face.
Dude. Yeah.
It's a slider,
seriously.
a 110-mile power slider.
Just strike three, we're all out. Yeah, it's amazing.
Yeah. Thank you. Thanks, Robbie. Thanks, Taylor, Jake, Will, Matt. Anyone
This was
want
fun, guys.
This is really cool. I think we
10 years.
We 10 years.
Can we just really quick? 10 years, 3 million downloads.
Never would have thought. No,
like,
never.
When you and Reese did this, you and I have
No.
talked about this, Ryan, and we've talked to Reese about this. When you guys started this 10 years ago, everyone looked at you like you were idiots. Like, what do you do? A podcast?
I looked at me like I was an
Podcasts
idiot.
aren't
Yeah.
really a
I
thing.
thought
Yeah.
Reese
They
was
weren't
crazy.
a thing.
I thought Reese was crazy. I was like, that's like a radio show. What do you mean? Who's
Yeah.
going to listen to this thing? How are you going to find it?
Yeah. So
Yeah.
cool. Honestly, just such a fun ride. And so I still talk to Dennis. We talk
Every
to
week.
Dennis every single week.
Every day. almost.
Not just
Yep.
clients, but
Yep.
Dennis out there calling for consultations. And I'd say 3 out of 4, if not 4 out of 5, 9 out of 10, whatever you want to call it. Most of them, it's just so cool to hear, like, man, I love the podcast. I love what you guys do, the value add. So super cool. And thanks everyone for being a part of this.
Yeah. Thanks for tuning in and listening. Let's just remind you of probably the most important link that you can click today for sure, maybe this month and maybe this year, maybe in your lifetime. And that link is dentistadvisors.com/10 years, because you're going to get yourself a Dentist Money Show mug. And I do wish, you know what? I wish it had our mugs on the mug, which would have been kind of a funny mug inception. But dentistadvisors.com/10 years. And while you're there,
the number 10.
the number 10, 10. And while you're there, we love talking to you guys. We love answering your questions, pointing you in the right direction, helping you make smarter financial decisions. And so if you want to have a chat with us, click the book free consultation link and set up a time to chat with one of us today. So anything else, guys? Or we close this thing out, shut her down.
You guys are great.
Okay. Well, thanks everyone for tuning in and listening. Thanks guys for being here. It's a pleasure as always. We'll catch you next time on another episode of the Dentist Money Show. Bye-bye now.